Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 18th, 2016. Well, this has been a remarkable bear market rally. It started on February 11th, so this has been going on for over 2 months now. Now, I had said over the last few weeks that I thought this 2083, which is this high right here, this 2083 level was an important resistance level, and it would tell us something. If price broke through this, then the case for a bear market would be challenged. It actually would have to take out this previous high from back here in November to cancel it completely. And if it does that, then there's a really good chance it's going to go put in a new high. This dashed green line is the high from last May. That's the all-time high for the S&P 500. But look how it's currently struggling to get through this 2083 level. Now it did close through it on Thursday. It did move through it. It went above intra-day, but it closed below, and then Friday was down just a little bit, and it's really just encountering some resistance there. So the next week or two are really going to tell us what's next. If we go down pretty sharply, if we go below this low right here, then that's this new sequence of lower low, lower highs, lower lows on a smaller scale than these big ones that are telling us that the bear market is still intact. That is the sequence according to Dow theory of a trend. A bearish trend is lower lows, lower highs, lower lows, lower highs. And so that's still intact. And if it does reverse down from here, then we should expect at some point, it won't go straight down, but to go put in a new low. So we just have to wait and see. And again, on this smaller scale, I think it will tell us what's going to happen on the larger scale. So we do have a low here, and if it really does stall here and then head down, take out this low, that's going to be a sign that, again, this bigger thing could be getting underway. So we'll just have to watch and see that. I think what's really going to drive this this next week is earnings. Now we do have some reports coming up, some news coming out this week, but it's kind of a typical week, even a little bit light. Tuesday we got housing starts. Wednesday existing home sales, and of course the petroleum status report currently is a pretty big market mover. Thursday jobless claims, Philly Fed outlook, and then that's really it for the news. Earnings, however, the earnings season started this last week, and now it's going to really take off with some momentum, some gusto. We got some really big names. This is the calendar for Monday. We got Morgan Stanley, Hasbro, Pepsi, Grainger. If you just look out, just at the kind of the headline, Johnson & Johnson, Goldman Sachs, United Health Group. We got Intel on Tuesday, and that's just all through the week. You can see, Coca-Cola, U.S. Bank, Dish Network, EMC, Abbott Labs. Big names are reporting this next week, and I believe the earnings are going to drive the market. I think that's kind of a tough game to read the earnings reports and then decide what the market's going to do based on that. The way we trade is the reality, and that is, regardless of what the earnings say, we watch really closely what the market does in response to that information. So this is a quick look at the S&P 500 futures market. I'm on a 120-minute time frame. The last couple weeks I've showed the 60-minute time frame, but this has gone on so long that it really doesn't fit on the screen to see the trend well, so I bumped up to 120 minutes, 2 hours per price bar. And you can see, again, this started back on February 11th. Over 2 months now, this move up on the S&P 500. This will correct at some time. Will it go and make new highs first and take out some of those levels we looked at, or will it turn down from here? Don't know yet. We're going to have to watch this really closely, but this will correct at some time. If it corrected from here, then an expected zone would be 1980 to 1960 based on last week's highs, on this current move. So we just got to wait and see. We can't guess, but the market will tell us. And once it does start down, we've got these targets, and there'll be some great trades once the trend is kind of proven and reality is in front of us. So we'll wait and see. Let's take a look at gold and oil real quick, as always. So this is gold, the gold futures contract, and we've been talking about this. This has been in a pretty remarkable recovery. If we look up on the weekly chart, gold has come down for quite some time, and this looks like a corrective wave on the higher time frames. So it ran up for quite a while, And now it looks like this was the impulsive wave. This could be what we call an Elliott wave 3, and this could be, a correction to this correction. Don't, that sounds confusing, but it's really not. It's pretty simple. But this is a sharp move. We expect it to correct a little bit probably before it continues on up. And the zone that it would correct into here is 1207 to 1156, and that really does look like it's happening. We had this sharp move up, and then we got lower low, lower high. So we did not go put in new high. Now it's heading down. So if it takes out this low here, it'll be right in this zone. That's where we expect. Could go down like this and then turn back around, and eventually work its way up to more highs. If it does not go down into this zone, if it just turns around from here and then makes new highs, then this leg is still underway. So again, that's got to be proven. And we keep saying it, but we just have to wait and see. We have to wait for the realities of the market, and once it proves what it's going to do, there's plenty of time to make some money and to trade with that trend. Any of these trends, I believe it's impossible to predict the absolute top and the absolute bottoms of things, and we don't have to. We can wait for the top to be proven, then the corrective trend, wait till it proves that it's over, and there's plenty of time to trade it. So that's how we do it here at Follow Me Trades, and we've been very successful with that. This is the crude oil futures market, and this is a daily chart, of course, and we've been talking about this recovery. We had said 3709 was the key level. If it broke through that, it looked like we had put in a bottom and the corrective wave to oil was starting. The recovery zone for that's way up here, from about 63 up to about the mid 80s. And it looks like that's happening. Now it's stalling just a little bit. We do have a nice, we came off of here with a nice high, higher low, new high, that was a pretty good sequence. And it pulled back here, and then it stalled into some resistance here at 43.84. Now it really looks like this trend is going to continue. We've got momentum coming out of this downtrend. You can see that on the oscillator here. This is higher here, this is lower here, this is lower, the green area, these are higher. And so the high probability is that this is just a temporary pullback. And it could come clear down as long as it doesn't put in a new low, as long as it doesn't go below here and then go for a new high. Then this trend is really going to still be intact, and we expect it to work its way up into this recovery zone up here. That'll take time, and we'll keep watching and keep seeing, but all signs are that oil is continuing, and there are some great trades in energy related stocks, and we've been trading them and doing really, really well. Well, that's it for this week. Be sure and check in. I think it's going to be, again, as earnings come out through this upcoming week of April 18th, that's going to probably set a good direction, a clear direction for the market. And it could be that it goes on to make new highs. I think that's the lower probability. I think just based on the technical analysis that we'll see another down leg start pretty quickly. And we're actually looking forward to that. We're ready for that. We've got trades queued up for that. So we will participate. So tune in next week, and we should have some clarity at that point. Thanks.